Hey everyone, welcome back for another deep dive. Today we're going to be talking about contrarian trading, and we're going deep with excerpts from Carl Futia's book and the audiobook, The Art of Contrarian Trading.
Sounds like fun.
I think it'll be interesting, for sure. I mean, have you ever felt like you're getting swept up by all the market hype?
Oh, yeah, definitely.
We're going to try to learn how to spot those moments
hmm
and maybe even how to do it before it kind of turns against you.
Right, right.
And we'll try to uncover how something as simple as a magazine cover, those glossy magazines,
Yeah.
can actually reveal these hidden market signals.
What's fascinating about Futia's approach is that he doesn't just say be contrarian.
Right.
He gives us a tool,
Oh, cool.
which is kind of neat. He calls it a media diary.
A media diary.
Yeah.
I'm picturing jotting down what Netflix shows I'm watching or something.
Maybe. Although that might have a contrarian angle too.
True.
But we're talking about tracking how the financial markets are being portrayed in the media. Headlines, magazine covers, TV segments, all that.
Okay, that's interesting. But I got to ask, why would a contrarian trader care about what the media is saying? Isn't the goal to be, totally independent?
Exactly. And that's where the media diary comes in. See, the media, they need to capture your attention. They need to, make money.
Yeah.
They often end up reflecting and amplifying whatever that crowd emotion is.
Okay.
By tracking those media narratives, we can begin to see when, fear or greed is starting to kind of take over.
Ooh, so it's like you're using the media hype machine against itself.
Exactly. And Futia, he has this great story about how his media diary actually convinced his wife to invest during the 2002 market low. Remember, everyone was panicking.
Oh, yeah.
But his diary was telling him that sentiment had gotten so negative that it was a great buying opportunity.
Wow.
And guess what? He was right.
Oh, that's awesome.
It is.
That's a pretty powerful testament to the power of this approach.
It is.
But doesn't this all tie into that idea of information cascades, that whole, herd mentality?
Right. An information cascade. That's
Yeah.
when people start making decisions based on the actions of others rather than, their own information.
Right.
Think of it like a flock of birds all suddenly swerving in the same direction.
Okay, I can see that.
Mm.
But couldn't contrarians get caught up in a cascade too? Just, in the opposite direction?
Absolutely. That's something every contrarian trader needs to be aware of. But Futia's media diary, it helps because it provides a historical record of what those narratives are.
Okay.
So if you see a sudden surge in stories, all with the same tone, whether it's fear or greed, that's like a red flag. Could be a cascade.
So it's kind of like a way to take a step back and say, wait a minute, is this my analysis or am I just going with the hype?
Right. Futia gives some great examples in the book, like the flood of headlines and magazine covers, during that 2006 market dip.
Yep.
And that actually signaled a buying opportunity.
And he also mentions that Time magazine cover featuring a grandmother working as a car hop during the 2002 market low. Remember that one?
Oh, yeah.
Really captured the feeling of oh, this is bad.
It did. And that's an example of what he calls a war crisis theme.
Yeah.
These types of themes, like think about the 1990 Gulf War, they often lead to exaggerated pessimism.
Which, of course, can create buying opportunities for contrarians.
Absolutely. He also identifies recurring themes. Remember that new era theme back during the dot-com bubble?
Yeah. All that talk about a new economy where, nothing mattered anymore.
And we all know how that ended.
Exactly.
The question is, how do we know when a theme is getting, too thematic?
Yeah, like when it's peak hype.
That's where the analysis of media signals comes in. Now, Futia actually points to Paul Montgomery. He's another pioneer in contrarian thinking.
Okay.
And Montgomery was really into magazine covers.
Magazine covers, really.
Specifically, when you see financial topics on the covers of non-business publications, that's a sign that, that the crowd is getting a little too exuberant.
So if People magazine suddenly has a cover story about, the stock market, that's my cue to run.
Maybe not run, but definitely pay attention.
Okay.
It's about looking for signs that a theme has permeated the culture.
Futia also points to the Time magazine cover with Jeff Bezos as Man of the Year in 1999. Do you think that was a sign that the dot-com bubble was about to burst?
Right. And think about that iconic Economist cover from 2008, the one with the bear and sunglasses.
Oh, yeah?
Could that have been a sign that the market was ready for a rebound?
Huh. I never thought of it that way. It's fascinating how those images capture how everyone's feeling.
And that brings us to what I think is the most intriguing part of Futia's approach.
Okay.
Using semiotics to decode media messages.
Semiotics. Now we're getting into the weeds.
I know, but I think you're going to like this. It's kind of a media detective thing.
Okay, tell me more.
Well, it's the study of signs and symbols, right? How they create meaning. With the media diary, we can go beyond just the words and start analyzing things like the size of the headlines, the images they use, the colors, even the looks on people's faces and photos.
So we're not just reading the news, we're reading between the lines.
Exactly. Futia even talks about analyzing the jokes about the market on, like, The Tonight Show. It can tell you a lot about sentiment.
Huh, that's wild. I never thought of it that way.
He uses the example of Jay Leno's jokes becoming more frequent and more pessimistic in 2002, right before the market bottomed.
So we've got our detective hats on, our media diaries are filling up with clues, but how do we actually use all this,
Yeah,
to make trading decisions?
that's the question, right? And luckily, Futia gives us two approaches, conservative contrarian rebalancing, and then there's aggressive contrarian trading. They both use the diary, but they're for different types of investors.
Conservative contrarian rebalancing, that sounds like something I could handle.
Yeah.
I'm not exactly a high roller.
Yeah, this approach is all about stability, long-term growth, slow and steady.
Okay, makes sense.
The key signal here is the 200-day moving average. That helps us identify trends.
So it's like filtering out all the noise and seeing the bigger picture.
Exactly. Now, when the S&P 500 drops 1% below that 200-day moving average in your diary, that's important, your diary shows you a bullish information cascade.
Hold on, how do you see an information cascade in the diary? What am I actually looking for?
Good question. It's all about the emotional tone. Like our headlines going from cautious to like totally euphoric, our magazine covers making these big predictions about the future. Is everyone on TV saying unstoppable? Things like that.
Okay, I think I get it. So let's say we see those signs, the market dips below that 200-day average.
Hmm.
What then?
That's when you might think about reducing your stock exposure. Not all of it, but maybe take some profits off the table.
Kind of like leaning against the crowd.
Exactly. And then on the flip side, when the S&P climbs 1% above that 200-day average and your diary is showing, well, a bearish calf raid,
Right. I'm with you.
that might be a time to consider increasing your exposure.
Buy when others are fearful, right.
Exactly. But why the 200-day average? Why not like 100 days or 300?
Yeah.
Seems random.
Yeah, I was wondering that too.
A lot of people do. It's not totally random, though. There's a lot of historical data that shows it's actually pretty reliable.
So it's not just a number, it's based on real market data over time.
Right. And Futia, he also talks about understanding like those bigger historical market patterns,
Okay.
like knowing how long bull and bear markets usually last, how big they get, to get an even better edge.
So it's about putting everything into context, not just following an indicator blindly.
Right. Now, what about aggressive contrarian trading? This one's for those who like a bit more
A
excitement.
little more risk, a little more reward.
Exactly. It tries to capture those bigger market swings. It uses the 50-day moving average as well as the 200-day.
Oh, okay, so we're adding another layer.
Exactly. And remember those market breadth indicators we talked about earlier?
Right, they measure how many stocks are going up versus down.
Right. Futia believes those can be really helpful, especially for the aggressive contrarian, because they give you a better sense of what's really going on.
It's like getting a deeper look at the market.
Precisely. Now, the big difference between the two approaches is how often you're trading. The aggressive contrarian might be in and out, multiple times a month, riding those sentiment waves.
So they're like a surfer, always adjusting, trying to catch that next wave.
Yeah, that's a great way to put it. But they're also watching that media diary carefully, looking for signs that things are about to change.
Okay, this is all super interesting. But is one strategy just, like, better?
That's the question, isn't it? But the truth is, it depends on you. Your risk tolerance, your goals, how much time you have.
So it's about knowing yourself as an investor, picking what fits your personality.
Exactly. But no matter which strategy you pick, Futia stresses discipline. Stick to the plan even when things are, even when they're a little crazy.
I can imagine. When the headlines are all doom and gloom, it must be hard not to panic.
That's where the diary comes in. It helps you stay grounded.
Like a rational friend talking you off the ledge.
Exactly. Now, Futia gives us some great examples in the book, like what he did during the 1987 crash, the 1990 bear market, the dot-com bubble. It's really interesting to see how it all plays out in real life.
It is right. Seeing how these concepts work, in actual situations. And he's not just following rules blindly, he's adapting. He's thinking critically about everything.
That's so important Contrarian trading isn't just about following a formula. You have to think for yourself.
It's almost like you need to be a detective, a historian, and a psychologist all at the same
I
time.
love that. You've got it. And remember, contrarian trading isn't about being right all the time.
Yeah, no one can predict the future, right?
Exactly. It's more about recognizing when the crowd has gotten things wrong, when emotions have taken over.
So it's about spotting patterns, not trying to call every top and bottom.
Precisely. And that's where the media analysis, the indicators, the historical knowledge, it all comes together. You're building a puzzle.
Okay, so we've got our two strategies. We've seen how they work. But what about other markets, like bonds, commodities, real estate? Can we use this stuff there too?
That is a fantastic question. And you know what? That's exactly what we're going to explore in the final part of our deep dive.
So are you ready to dive into these other markets? I mean, bonds, commodities, it seems like a whole other world out there.
It can be, but the contrarian mindset, it's pretty versatile.
Okay, good. So let's start with bonds. How do we even, think about them like a contrarian?
Well, the thing to remember is that bond prices, they move opposite to interest rates.
Right, right. Rates go up, bonds go down.
Exactly. So let's say everyone's convinced rates are about to spike, bond prices would be tanking, right?
Yeah, that makes sense.
That's when a contrarian might start getting interested. They figure maybe the crowd is overreacting, maybe prices have dropped too much.
So it's still that buy low, sell high idea.
Yeah, pretty much. And the media diary, it can be useful here too.
Okay, so we're still scanning those headlines.
Right. Look for extreme sentiment about interest rates. If everyone's freaking out about inflation, rate hikes,
Maybe that's our signal.
could be. The market might have gotten ahead of itself.
Interesting. Okay, now what about commodities? Those markets are like notoriously volatile.
Yeah, they can be wild. So many things affect them. Global demand, weather, politics.
It's a lot to keep track of.
It is. But the same principles apply. Watch for those information cascades, try to decode those big investment themes, and see how the media is talking about things.
So if everyone's going on about like a super cycle in oil or gold or something and prices are shooting up,
That's when a contrarian would probably hit the brakes. Look for signs that the hype has outpaced the actual fundamentals.
so even in a crazy market like commodities, there's still a place for contrarian thinking.
Definitely. It's about recognizing when emotions are driving things more than the actual facts.
Okay, this is all making sense. But before we wrap up, I got to ask, are there any downsides to being a contrarian?
Oh, for sure. I mean, one of the biggest risks is being too early. The crowd can stay irrational for a long time.
So you could be right, but still lose money if the market doesn't like catch up to you fast enough.
That's why managing your risks is super important. Don't go all in on any one trade and be prepared to hold on for a while.
So patience is key, just like with any kind of investing.
Exactly. And being contrarian, it doesn't mean being against everything.
Right, right. Sometimes the crowd is right.
Absolutely. It's about thinking independently, analyzing things for yourself.
So as we wrap up our deep dive into the art of contrarian trading, what are like the key takeaways for our listeners?
I think the big one is that contrarian thinking, it's a really powerful tool, but it takes work. You got to be disciplined. You got to be a critical thinker.
And a media detective.
Exactly. The media can be helpful, but you have to analyze it carefully. Look for those hidden emotional currents that are driving things.
We've also learned that we can use these principles in all sorts of markets, not just stocks,
Right. And that risk management, patience, those are super important too.
no matter what you're investing in.
Absolutely. And I think, maybe the most important takeaway is that this is all about learning. The market changes all the time, so stay curious, be adaptable.
I love that. It's a journey, not a destination. Well, thanks for joining us on this deep dive into the art of contrarian trading. We hope you learned a lot and that you're feeling inspired to think a little differently about things.
It's a pleasure.
Remember, keep that media diary going. Don't be afraid to challenge those assumptions. Until next time, happy investing.